Over to Steve Liesman. He's in Jekyll Island, Florida. Big names there at the Fed conference talking about the economy, Georgia, Jekyll Island, Georgia, I should say. Big names in economics discussing how they're going to get this economy out of recession. Steve.
Yeah, Trish, and not only get the economy out of recession, but get the Fed out of the business of expanding the balance sheet and deal with the inflation issue. A lot of talk in the hallways here about the quote-unquote exit strategy, and Fed Chairman Ben Bernanke last night making some comments on that, saying that the Fed staff and the FOMC right now are working on an exit strategy, and I quote here, very intensely on this issue. So that's the first time he said that. He made some positive comments last night about the capital raising by the banks in the wake of the stress test, saying it was encouraging and saying banks have gone out now and raised non-government guaranteed debt. But he also made, for the first time, I think, some positive comments about deflation. Have a listen.
We have to, on the one hand, be aggressive to achieve the necessary support for an economy which has taken a very hard blow from the financial crisis, to allow it to recover, to avoid any risk of deflation, which I now believe is receding, but certainly needs not to be ignored. But at the same time, to be nimble enough to remove stimulus in a way that will allow us to assure price stability in the medium term.
As that risk of deflation recedes, the Fed's going to talk more about exit strategies. Fed Chairman Ben Bernanke talked about them last night, increasing how much it pays interest on reserves to keep some of that money out of the system, reverse repos, as well as sort of Treasury deposits at the Fed, all of which soak up cash. Now, I think the Fed is still a long way from changing course publicly. I think it's talking behind the scenes about these things. Something to think about, Larry, that I know you are sort of intensely into the technical aspects of this, but think about this. Could the Fed, for example, as the fall comes around, if the economy is secure, could it begin to sort of restore that gap between the discount rate and the Fed funds rate, raise the interest rate on the TAF, the term auction facility, all of which makes the Fed money a little less attractive to the banking system? So those are some ideas you might want to think about. Could tell you more about them in the coming months.
Yeah, but it's not the target rate that worries me. It's the volume of printing press money they're creating. Do you know, as the U.S. dollar has been slumping in the last couple of months against the major currencies, it is precisely because the U.S. balance sheet and the printing press is running substantially faster than the European Union or Japan or Canada. That's why the dollar is falling. And now we're seeing a bump up in commodity prices. And that does raise at least a mini-inflation threat. So talk is cheap, my friend. I want them to give me an exit strategy. Lay out an exit strategy, because you know what? If you target the wrong things, then you're going to get bad results. And this is what started the whole rigmarole back in 2003. Larry,
can I respond and say
I want you to respond. I'm challenging you. I want you to think hard on this. I'm bolstering your backbone. I want you to be mean, nasty, and brutish when it comes to protecting the value of our dollars.
Larry, you have become a tool of the Fed. And let me explain how, sir.
Your
concern about inflation is just the kind of concern that they want out there to fight deflation. Let's be clear. While the Fed chief said the threat of deflation is receding, deflation is at the moment their primary concern. They want you concerned that the Fed is loose on inflation, because that helps them fight deflation.
Yeah, well, okay, that's a little bit roundabout, but let me bring in Rick Santelli. Hold on.
Okay.
Rick Santelli, I want you to join this highbrow but very important discussion, all right? It's a very important discussion, Rick. Will the Fed now or ever in our lifetime protect the value of our currency? That is on the front page here on the call.
Why should they start now?
Right. Thank you. That's right.
I mean, I think the answer is that easy. And let's look at it this way. You know, we're worried about a drip in the basement in terms of deflation. And I understand that asset prices, think homes, are falling. But when Fred Flintstone's feet actually touch the ground with all the printing they're doing, that traction coming out of the box when things look a little better is going to be stunning in terms of those CPI and PPI numbers down the road.
See, that's the thing. Commodity prices are rising. Energy prices are rising. We're going to get to all that in just a minute. But Steve Liesman, you heard Santelli, you heard me. You got to go back in that fancy-looking house back there in Jekyll Island, and you got to put your best foot forward. And you got to say, we need an exit strategy to protect the value of the dollar, because you know what? A stable currency is integral to economic growth. We learned that. If you let the currency collapse, then the economy is going to collapse.
There's one more point, Mr. Kudlow. One more point.
Go ahead,
What's
buddy.
the buzzword buzzword lately. Everything gets politicized. When is Mr. Bernanke's term up?
Next year, 2010.
Right. Early 2010.
Early 2010.
So maybe he's talking about an exit strategy. You think the politics of the day are going to let anybody pull the liquidity anytime too early?
Okay, hold that thought.